Most traders backtest wrong. They run hundreds of trades, see a nice green equity curve and think they've got an edge. Then they go live, trade it live, and everything falls apart. I backtested over 600 trades over 5 years of data. Then I traded it live for 9 months with real money, real capital on the line. And by trade number 14, I'd gone through an 8-loss streak. My win rate was down to 21% and I had a negative expectancy. This video is an honest answer to what most trading educators don't talk about. Does backtesting actually work? I'm going to show you every number. So here we go. This is the data from 2020 through 2024. Every single trade across 2 pairs. Over 600 trades with a win rate of about 41%. Expectancy at about 0.29R. Average win around 2.2. And my average loss was just under 1R. Now, bear in mind, this does not account for spreads, slippages, commissions, all that good stuff. So again, this is without friction. So bear that in mind. Total return across this sample was 189R. Now again, this is with absolutely zero filtering process. So this is just the raw bare bones data. Now, the longest losing streak that I encountered during this period was 9 in a row. And this is what a genuine 41% win rate actually looks like. You spend roughly 70% of the time in some form of drawdown. It doesn't feel like winning in the moment. Most of the time it just feels like waiting. Most of the time it feels like you're losing. So the question remained was, could I actually execute this model with real money and see a similar result? Okay, so let's talk about what actually happened in the live data. So I started this on June 12th, 2025. That was when the first live trade was taken, and it was 2 positions on that day, both on the pairs that I trade. One was a win, one was a loss. Okay, fine. By the end of that first week, I had 6 trades, 3 wins, 3 losses. My equity curve was sat just over 3R. Early returns look solid, 50% win rate, but at 6 trades, you don't really know anything, right? It's just pure variance. The confidence interval is enormous. I knew that the real test hadn't really started yet. And then the losing streak came. From July to August, I had 8 straight losses, one after the other. Now, this was due to a number of factors. Again, purely edge expectations and a couple of errors and mistakes that I made along the way. My equity dropped from plus 3R to minus 3R. A 6R swing. My win rate collapsed to 21% and expectancy was negative. At trade number 14, the live track record looked nothing like the backtest. It looked like a losing system. And this is the exact moment where most traders quit. They abandon their system, they look at the numbers and they assume that something's wrong. Look at the backtest that said 41% win rate and you look at the live results, the live data that says 21%. Every instinct in your body, every bone in your body says that something is broken. But here's what the backtest had already told me. Prop firm match is the #1 place I go to for anything prop firm related, whether that's reviews, offers, spreads, payout, you name it. They cover everything about these firms. And we know how important it is when it comes to choosing the right firm. So check out the link in my bio for more information. The backtest told me that these streaks were not just common, but inevitable. An 8 losing streak happened 4 times across the data. So whilst it is rare, it happens. And with any probabilistic game, any game where variance plays a factor, anything can happen. And 8 losses in a row can happen with a 41% win rate system. But at just 14 trades, I was inside the noise. Sample size was far too small for me to draw any conclusions from and abandon the system. And then the recovery came around. So from trade 15 to 22, I had 4 wins in 8 trades. That brought my win rate back up in line to 41%, and it brought my equity curve to just under 7R. And this is what positive expectancy looks in real time. It doesn't look or feel like winning all the time, but you just have to keep executing your system. Just 4 wins erased the entire 8 losing streak and brought my account back up to positive. The next 30 trades were kind of a boring period. It's this unsexy middle part where my win rate oscillated between 33 and 42%. Equity peaked, came back down, more drawdown, 6 consecutive losses. But this time, you know, there was no panic, right? Because the backtest has shown drawdowns of up to 11R, if not maybe a little bit more. The metrics were starting to converge and the system was doing what systems do. But most importantly, I was doing my job in that system. I was consistently executing that system and that model. See, we can all look back at a strategy, post data, look back on the years and draw a nice equity curve. But what's most important is your ability to execute on that edge, your ability to execute on that system with discipline and to keep executing on it, regardless of what you think is going to happen or what you want to happen next. That is your only job, to respect the system and to execute the system. So now here's the chart that actually answers this question of does it actually match and does backtesting actually work? So I ran this through 1,000 Monte Carlo simulations of 60 trade paths, all similar expectancy, all with actual R distribution. Now, what you can see here is the live equity, my live equity curve overlaid with the backtest expectations. Now, you've got two shaded areas here. One is the 50%. So where the majority of your time is going to be spent within the strategy expectations. And then the slightly lighter shading is the 10 worst and the 10 best periods. So these are the top 10%. These are the bottom 10%. And you can see during the early periods of the strategy, I was within this bottom 10%. So I was underperforming the strategy. Now, the goal is obviously to keep executing this. And as I continued to execute this strategy, this model, my equity curve and my expectations started to converge with my backtest expectations. And you can see that we're pretty much in the 43rd, or as Claus put it, the 43rd percentile here, right in the middle of the envelope. So I'm not outperforming, I'm not underperforming, I'm simply tracking right now. And you can see how our win rate rolls every now and again, right? So we slowly but surely, after more trades take, our win rate starts to smooth out. Not because trades become more predictable as we go on, but because the bigger the sample, the more likely you are to converge close to that expectancy of your strategy. So here you can see win rate on my live is slightly lower at around 38%. Again, that's due to some personal mistakes. Expectancy is again slightly lower. Average win is inevitably going to be slightly lower based on cost, commissions, spreads, all that good stuff. My average loss is slightly smaller because I actually know when to cut my losses early and just take a small loss on these trades. So the bottom line, does backtesting work? Yes, it works, but only if you let it. So the hardest part of this wasn't the strategy or wasn't running the backtest. The hardest part was surviving the drawdown, surviving the 8 losing streak without changing anything, without my mind taking control and wanting to change something. I know that the math made sense and the math said to keep going, and I had to trust in that data. And 60 trades later, I'm pretty much at expectancy. I'm pretty much around the average of what I would expect from this sort of system. The backtest didn't promise smooth returns. It promised that over a large enough sample that the edge would show. And it did. But there's a few conditions that backtests actually work under. And I'm going to talk about 3 right now. So the first one is that backtests only really work if you are fully mechanical. So if there's discretion in your entries when you're backtesting, you'll unconsciously fit the backtest to the data. You'll take entries that worked and you'll skip trades that didn't work. And you probably won't even realize you're doing it. So in order to have reliable data, your model has to be mechanical. Your entry criteria has to be mechanical. The second is that you need a large enough sample size. See, a lot of people, they'll take 50 trades over a year's worth of data and assume that they have an edge. But at 50 trades, you really can't distinguish between an edge and just simply noise. I have over 600 backtested trades, and it took almost 60 live trades for that live data to start converging with the backtest expectations. So the math doesn't care about your impatience. Build enough of a sample for that sample to be reliable. And the third and final one is that one most people don't actually talk about. It's that you have to actually survive the drawdowns. The backtest told me that up to a 9 loss streak could happen. And it told me that 70% of the time I'd spend in drawdown. But that information is only valuable if you actually internalize it into a live market and into live executions. If you wait until the losing streak to wonder if the system's broken, you've already lost. My backtest didn't give me a strategy. It gave me a psychological framework to deal and manage my expectations in a live market. And that's the real answer. Backtesting doesn't predict future returns. It gives you the conviction to stay in the trade when everything feels like it's falling apart. And for a system with a 41% win rate, that conviction is the entire edge. So I hope you enjoyed today's video. I hope you took some value from it. If you did, make sure to comment down below. I believe there's a new hype button on YouTube, so I don't know what that's all about, but smash the hype button and I'll see you in the next one.